All right, so we've got a pretty hefty stack of research here, all about peer-to-peer property lending in the UK.
Yeah, it looks like someone's ready to really dive deep into this whole alternative investment world.
And honestly, who isn't these days, right?
Right.
We've got a little bit of everything yet, articles,
Uh-huh.
platform overviews,
Yep.
expert opinions, you name it.
It works.
So our mission here is to help you make sense of it all.
Yeah, help you figure out if P2P lending is really right for you.
Exactly. And you know what really struck me right off the bat?
What's that?
We've got platforms like Assets Capital. They've been around for over a decade,
Uh-huh.
delivering pretty consistent returns for lenders.
Right.
But then you hear these stories about platforms crashing and burning.
Oh, yeah, leaving investors high and dry.
Talk about a high-stakes game, right?
Absolutely, and that's why due diligence is so essential in this space.
Okay, so before we get ahead of ourselves,
Yeah.
let's back up for a second.
Okay.
Can you just give us a quick rundown of what P2P property lending actually is?
Sure. So essentially, P2P property lending platforms cut out the traditional middleman, the banks.
Okay.
They connect individuals who have money to lend with borrowers who need financing for property projects.
So things like buy-let mortgages,
Exactly.
development loans.
Yep, all kinds of things.
So I could theoretically lend money to someone building a fancy new apartment complex in, say, Manchester.
You could, and that's one of the big appeals of P2P lending. It gives you more control over where your money goes.
Yeah, instead of investing in like a generic fund,
Right.
I can choose specific projects.
Exactly.
That sounds way more engaging than just watching numbers on a screen.
It is, but let's be real.
Okay.
What's the main reason people are interested in P2P lending?
Returns, baby?
You got it. It often comes down to the potential for higher returns.
Okay.
Compared to traditional savings accounts or bonds.
But I'm guessing there's a buts coming here.
There's always a but when it comes to investing, right?
Yeah.
And in this case, the but is risk.
Okay.
Remember, higher potential returns usually come with higher risks.
It's just the nature of the game.
Exactly. So before you get too excited about those advertised rates,
Right.
we need to talk about how to assess the risks involved.
Okay, risk assessment 101.
All right, so first, it's crucial to understand that not all P2P platforms are created equal.
Okay.
Some are highly established with robust track records and stringent lending criteria.
Right.
Others are newer, perhaps more agile, but potentially less proven.
It's like choosing a restaurant, right?
Exactly.
You wouldn't just walk into any random place. You'd check reviews,
Yeah.
look at the menu,
Mm-hmm.
maybe peek at the kitchen if you could.
Exactly. And in the world of P2P lending, due diligence is your menu, your reviews, and your kitchen inspection all rolled into one.
Love that.
You need to dig deep
Okay.
into a platform's history, understand its lending practices, and scrutinize how it assesses risk.
So where do we even begin with this whole due diligence process?
Well, a good starting point is to understand the types of loans a platform specializes in.
Okay.
Some focus on lower risk loans,
Mm-hmm.
like those backed by residential properties with low loan-to-value ratios.
Okay.
Others dabble in higher risk, higher return areas like development financing or bridging loans.
Well, speaking of bridging loans,
Yeah.
can you break down what exactly they are?
Sure. So imagine a property developer needs quick cash to purchase a site
Okay.
before their main financing comes through.
Okay.
That's where bridging loans come in, short-term, high-interest loans.
Sounds risky.
They're inherently riskier because they're short-term
Yeah.
and rely on the borrower having a solid exit strategy.
Okay, so bridging loans are definitely not for the casual investor.
Right.
You need a deep understanding of the property market
Yeah,
and a healthy appetite for risk to even consider them.
exactly. And that brings us back to due diligence.
Right.
Before you even think about investing in a platform that offers bridging loans,
Okay.
you need to understand how they vet borrowers, what kind of security they require, and what their track record is like in terms of defaults.
Got it. So due diligence is about understanding the platform, the types of loans they offer,
Mm-hmm.
and how they manage risk. But it's not just about the platform, right?
Right.
We also need to look at the bigger picture.
Absolutely, the UK property market itself.
Right, because even if a platform has a stellar track record,
Yeah.
if all their loans are concentrated in like a slumping market, that's a red flag.
Precisely. You need to look beyond the platform's shiny brochures and consider the underlying economic fundamentals of the properties backing the loans.
So things like interest rate hikes, stricter lending criteria, even government policies,
All of that.
all these factors can impact the performance of P2P loans.
Absolutely. It's a constantly evolving landscape.
So how on earth can anyone keep up?
Well, that's the challenge. And frankly, it's part of what makes this whole world so fascinating.
I guess so.
But there are tools and resources out there to help you stay informed.
Reputable P2P platforms will provide regular updates on their loan books and performance.
Mm-hmm.
There are industry newsletters, property market analysts, a wealth of information if you know where to look.
So it's like being a detective, right?
Yeah.
Piecing together clues,
Exactly.
to find the best opportunities, avoid the
It's
pitfalls.
all about research.
Okay, this is all starting to make sense now.
Good.
We've covered what P2P lending is,
Mm-hmm.
how to assess platforms, the importance of understanding the broader market.
Right.
But before we go any further,
Yeah.
there's one more thing I'm dying to ask about.
Let me guess those magical IFISs
You read my mind.
that promise to shield your P2P profits from the tax man.
Exactly. Several sources mention them, and they sound too good to be true.
Well, tax haven might be pushing it a bit.
Okay.
But IFISs, or Innovative Finance ICs, can be a powerful tool for boosting your P2P returns.
Okay, so can you break down how these things actually work?
Of course, but let's save that juicy discussion for our next segment.
Ooh, a cliffhanger. Consider it a little incentive to keep you coming back for more.
All right, I'm hooked. Okay, so last time we left off talking about these IFISs.
Ah, yes, those tax havens for P2P profits.
Well, you said tax haven might be pushing it a bit.
It might be.
But IFISs, or Innovative Finance ICs,
Right.
can be a powerful tool for boosting your P2P returns.
They can.
So essentially, they allow you to, shield your earnings from income tax.
Exactly.
So if I'm understanding this right, any interest I earn from my P2P investments within an IFISA
yeah,
won't be added to my taxable income.
that's right.
That's a pretty sweet deal.
It is. It means more of your money stays in your pocket.
Right.
Which can make a big difference over time, especially if you're reinvesting those profits.
Definitely. It's like getting a bonus from the government for being a savvy investor.
I like that.
But IFISs aren't the only tax-efficient strategy out there, right?
Right.
Simple Crowdfunding mentioned something called a SSAS.
Yeah.
Bit of a mouthful.
It is.
And hinted that it might be relevant for P2P investors.
It can be SSS, stands for Small Self-Administered Scheme.
Okay.
And it's basically a type of pension scheme
Okay.
that gives you a lot more control over your investments compared to traditional pensions.
So instead of having my pension fund manager decide where my money goes,
Yeah.
I could potentially use a SSS to invest directly in P2P loans.
Exactly. And the beauty of an SSS is that it comes with some pretty attractive tax benefits.
Like what?
Well, your contributions are usually tax deductible,
Okay.
and any growth within the SSS is tax-free until you retire.
Okay, now this is getting really interesting. So I could potentially use my pension contributions to fund P2P loans,
Yeah.
get tax relief on those contributions,
That's right.
and have any profits grow tax-free.
You got it.
Talk about hitting the trifecta.
It does sound pretty appealing, doesn't it?
It does.
But there's a catch. SSS are generally more complex to set up and manage than IFISAs.
Okay.
They're also typically more suitable for higher net worth individuals
Okay.
or company directors who has a good understanding of investment and pension rules.
Makes sense. So while IFISs seem like a no-brainer for anyone dabbling in P2P lending,
Yeah,
FSS are more of a specialist tool
right.
for the big leagues.
Exactly. And regardless of which strategy you're considering, it's always wise to seek professional financial advice
Of course.
to make sure it aligns with your overall financial plan
Mm-hmm.
and risk tolerance.
Solid advice. It seems like with every step we take in this P2P world, there's another layer of complexity to unravel.
There is.
But it's also incredibly empowering.
Right.
The more we understand, the more control we have over our financial destinies.
Absolutely. And that's exactly why we're taking this deep dive together. It's about equipping you with the knowledge to make informed decisions.
Right.
Whether you're a seasoned investor
Yeah.
or just dipping your toes into alternative investments like P2P lending.
Speaking of which, we've covered a lot of ground today.
They have.
We talked about what P2P lending is, how to assess platforms, the importance of understanding the broader market, and even some tax-efficient strategies to boost your returns.
It's a lot to take in.
It is, but I'm feeling way more confident about navigating this space now.
That's great to hear, but remember, this is just the beginning.
Right.
The world of P2P lending is constantly evolving with new platforms, emerging regulations changing, and market conditions shifting.
So it's a journey of continuous learning and adaptation.
It is.
So what's the most important piece of advice you
Yeah.
can leave our listener with
Yeah.
as they kind of embark on their P2P adventure?
Never stop learning.
Okay.
Stay curious, stay informed, and never be afraid to ask questions. Read industry news, follow platform updates, and engage with other investors to share knowledge and experiences. The more you know, the better equipped you'll be to navigate this exciting and dynamic world.
That's a great note to end on, but before we wrap up completely, there's one more intriguing tidbit from Fourth Way that I wanted to touch on.
Okay.
It's about the potential social impact of P2P lending.
Oh, interesting.
What are your thoughts on that? Yeah, it's interesting because, when most people think about investing, it's all about,
Yeah,
maximizing returns, minimizing risk, all that stuff.
right, the numbers.
Right, exactly. But Fourth Way touched on something that I think gets overlooked a bit.
What's that?
the potential for P2P lending to have like a positive social impact.
Oh, that's interesting, yeah.
So what are your thoughts on that?
Well, it's a fascinating aspect, isn't it? Because at its core, P2P lending is about connecting people, those with capital, to lend with those who need it, to make things happen.
Right.
And in the realm of property, that can translate to supporting projects that go beyond just bricks and mortar.
Exactly. I'm thinking about things like affordable housing developments,
Yeah.
community-led regeneration projects, even those eco-friendly builds that simple crowdfunding was talking about.
Right. It's like your money isn't just sitting in some, faceless fund.
Yeah.
It's actively contributing to something tangible,
Mhm.
something that benefits people and communities.
Like impact investing,
Yeah,
but with a property twist.
exactly. And I think that resonates with a lot of people these days,
Yeah.
especially, millennials, Gen Z.
Right.
They're increasingly conscious of where their money goes
Mm-hmm.
and the impact it has, on the world.
Yeah, absolutely. So are there specific platforms that are kind of leaning into this whole social impact angle?
There are definitely some that are showcasing projects that align with, specific values.
Okay.
Whether it's sustainability, community development, or even supporting underrepresented entrepreneurs.
That's great. And does that mean sacrificing returns?
It doesn't necessarily.
I'm
Many
sure.
of these projects are financially viable and they offer, competitive returns for lenders.
It's a win-win, really.
It is.
You get the potential financial upside of P2P lending,
Yeah.
but you also get that like warm, fuzzy feeling of knowing that you're doing some good in the world.
Exactly. And beyond that, the feel-good factor.
Right.
I think this focus on social impact could actually benefit the P2P sector as a whole.
How so?
Well, by attracting a wider range of investors, people
Mm.
who are motivated by more than just profit,
Mm-hmm.
it could bring more stability and resilience to the market.
That's a great point. It kind of broadens the appeal, right?
It does.
Beyond just those seeking the highest possible returns.
Exactly.
It brings in people who want to see their money make a difference,
Mm-hmm.
which in turn could create a more, diverse and robust P2P ecosystem.
It's a really interesting evolution to watch.
Yeah.
And I think it speaks to this broader shift we're seeing in the investment landscape in general.
Like what?
Well, people are demanding more transparency,
Okay.
more alignment with their values,
Sure.
and more opportunities to be actively involved in shaping the world they want to live in.
I love that it's not just about passive investing anymore.
Right.
It's about using your capital as a force for good,
Exactly.
about creating a future where, financial success and positive social impact go hand in hand.
Well said. And who knows, maybe this deep dive will inspire our listener to explore the world of P2P lending,
Yeah.
not just as a way to grow their wealth, but also as a way to contribute to projects that make a real difference in people's lives.
I mean, wouldn't that be fantastic?
It would, and honestly, I'm feeling inspired to do the same.
Me too. It's been eye-opening to see how much potential there is in this space,
Yeah,
both from like a financial and a social impact perspective.
I agree. It's been a great discussion.
It has.
And I think we've covered a lot of ground.
Yeah.
From, the nuts and bolts of how P2P lending works
Oh.
to the broader trends shaping its future.
All
I
right.
hope our listener feels empowered to take this knowledge and explore further.
Me too. Remember, knowledge is power, especially in the world of investing.
Absolutely.
The more you know, the better equipped you'll be to make informed decisions that align with your financial goals and your values.
Couldn't have said it better myself.
So with that, I think we've reached the end of our P2P property lending deep dive.
It's been a pleasure exploring this world with you.
Likewise, thanks for joining us, and we'll see you next time on the deep dive.